Hello, everyone, and welcome to the SVOG Auditing and the Compliance Supplement webinar. We're going to give just another moment for everybody to log in and get settled, and then we will begin shortly. Okay, so I see a few more people trickling in, but I think we're ready to start. So welcome again, everyone. Thank you so much for attending today. Without further ado, I would like to introduce Matthew Stevens, Director of the Shuttered Venue Operators Grant Program.
Great. Thank you, Tara, and good afternoon, Shuttered Venue Operator grantees, and welcome. As we head into summer, it is our sincere hope here at SBA that you are continuing to recover and that you're busy planning and executing many performing arts events, exhibitions, the showing of summer blockbusters, and many, many concerts. I know our team is looking forward to attending all of those things. So that said, I want to thank you for making the time to be with us during a very busy season. As a reminder, this webinar is one of a three-part series specific to audit guidance for SVOG awardees. And Tara will be going into more detail momentarily about the series and how you can access these recordings. Today, we are continuing our journey into the requirements of single and program-specific audits. We received a lot of great feedback and many questions in our initial session. And today, we'll address some of the common themes we've identified. We're also going deep on the compliance supplement, which was published by the White House Office of Management and Budget last month, which is a first for a Small Business Administration. The compliance supplement is an excellent resource as you work with an auditor to complete your single or program specific audits. Now, for our for-profit entities in the SVOG family, today's information is just as important as it is for our nonprofits and other non-federal entities. But I do want to remind our for-profit awardees that we are working on a third and final webinar specifically for you, because you do have some additional options in addition to the single or program specific audits that we're discussing today. We'll briefly touch on additional options for for-profits in this session, but again, the third webinar will address them comprehensively. So we've got a lot of material to cover today, and you're in great hands with Tara Bartlick and Jennifer Crow. And at this time, I will pass the floor back to Tara. Go ahead, Tara.
Excellent. Thank you, Matt. So today I'll just go over some brief logistics for the presentation. This meeting is being recorded and will be in listen-only mode, but we do encourage that you ask questions during the presentation using the question and answer chat feature. Questions will be reviewed by staff, and we will also cover them during Q&A portions of the presentation. Any questions that do not pertain specifically to SVOG audit requirements or questions that might be very specific to your particular grant should be sent to your grant management specialist. And you can also email questions to svogrant@sba.gov if you have not yet had a grant management specialist assigned. Matt touched on this a little bit in his intro, but our agenda for today will include a short recap of some of the key points covered in our first webinar related to audit requirements, and some clarifications regarding the single audit process. And the main focus of today's webinar will go into the SVOG section of the compliance supplement. We'll discuss the compliance areas specific to the SVOG program as it pertains to single and program specific audits. We will also highlight recent information that we've shared regarding our audit requirements. And at the time we will, or at the end, we will save some time for questions as time permits. So as always, before we go into content, we want to pause and make sure that everyone on the line is in the right place. So this webinar is intended for SVOG recipients that are required to complete an audit because they have or will spend $750,000 or more in total federal funds in a given fiscal year. As I mentioned, we will not have time today's office hours to address questions outside of the scope of this presentation. So we recommend that any questions related to application processing or cost compliance and closeout, that those go to your grant management specialist or SVO grant at sva.gov. Today's webinar is the second in the series of 3 audit-related webinars focusing on audit requirements. And we will be focusing on the recently published compliance supplement. So that is relevant for folks who intend on submitting a single audit or a program-specific audit. And typically that will be non-federal entities. So we'll get into that a little bit more. But for the for-profits on the line, they will have 2 additional options available to them. And that is what our third webinar will be dedicated to going into depth on. So that third webinar is scheduled for July. And I also mentioned we're going to be covering some outstanding questions that came up during our May 12th webinar, introducing SVOG audit requirements and the single audit process. So here is just a quick overview of that audit webinar series. May 12th's introduction section is now posted to our website. So if you go to sva.gov/SVOG, the recording is available there. Today's webinar focuses on auditing and the compliance supplement. So these 2 first webinars are mostly relevant for the non-federal entities, and that includes any state or local governments, Indian tribes, nonprofit organization, and institutes of higher education. So these options are available for for-profits, but additionally, for-profit entities have 2 other options that we're going to be going into depth on in the July session. So now we're going to go into the recap and clarifications of the introduction to the single audit webinar. As I mentioned, the recording of the May 12th webinar is available on our site. So if you have not already been able to review that, please do so. It contains a lot of great information that we're super excited to get out. The audit action item is an action item in the post-award phase that will be sent to the portal for all grantees whose total SVOG award is $500,000 or more. That's the general universe we expect might need to complete an audit. However, it's your responsibility to indicate if you meet the audit requirements. So if your SVOG award is less than $500,000, but you intend to expend $750,000 or more in total federal funds in a given fiscal year, please reach out to your grant management specialist and request that action item. Please note that we have not yet begun sending out the audit action items. So the only groups who will need to reach out to the grant management specialists if they haven't received it are the folks who will not be receiving it automatically because their award is less than $500,000. So as we mentioned, the webinar today and the first webinar in our series are most relevant for non-federal entities because non-federal entities are required to either submit the single audit or the program-specific audit, which we're covering in depth through these 2 sessions. So again, these are state and local governments, Indian tribes, nonprofit organization, and institutes of higher learning. However, for the non-federal, the for-profits on the line, this might be valuable information. And although you do have a third webinar coming up, we do recommend that you stay on the line. Here is a breakdown of how those different those different audit reporting options play out for the different entity types. So you'll see for non-federal entities, the entities just described in the previous slide, the 2 options are single audit or program-specific audit. So how do you know between those 2 which one you should pursue? The single audit is required for non-federal entities that have expended federal funds from multiple sources. So this means that you got a SVOG award and you had another federal award, and you are going to have a combined single audit accounting for the activities under those two awards. The program-specific audit is available for non-federal entities who only expended SVOG funds and have not received funds from other federal sources. You'll see in the column to the right that for-profit entities may submit one of these two options. However, they may also submit a financial statement audit or a compliance examination. And so those are the two topics that we're going to go into in the July webinar discussing options for for-profit entities. So that is the major recap that I wanted to highlight. And I will now turn it over to Jen to go into some terminology and abbreviations as we discussed last time, and really get into the nitty-gritty of the audit requirements. Jen?
Thank you, Tara, and good afternoon, SVOG grantees. I'm excited to be here again for the second webinar of SBA's Technical Assistance Webinar Series related to audit requirements. As Matt mentioned, my name is Jennifer Crow, and I'm a Senior Manager in the Audit and Assurance Practice at Williams Adley. I think Matt and Tara did a really good job of explaining the goals of today's event and their introduction, so we can go ahead and just jump into the content. On here, this is just a slide to give you definitions of various acronyms and terms that I'll use throughout today's presentation. If you see something that you're not sure of what it means, this information will be inserted into the chat box, so you can refer to it at any point throughout today's presentation. All right, so one of the topics in which we received several questions on is whether or not a grantee qualifies for a program-specific audit, or if they must elect a single audit. You know, there's likely going to be several different or unique scenarios out there, and we can't cover every single one specifically today. However, you know, the information on these next few slides should help you make the determination based on your specific situation. So first, I just want to start off by recapping the similarities and differences between the two types of audits. To think about the single audit, you know, I think it's best to think about it in terms of almost two separate audits, really. During the single audit, the auditors are going to be performing a financial statement audit, and they're also going to be performing a compliance audit that is specifically in accordance with the Uniform Guidance, or 2 CFR 200. Now, it's still one audit, and the work that the auditors do will be pretty intertwined and performed simultaneously. But I've just found that when trying to, you know, conceptually understand the difference between all the types of audits out there, it's easiest to think about it from that context, because I know a lot of people are familiar with just a financial statement audit in and of itself. For the scope of the single audit, it's going to include all federal awards that your company received during your fiscal year that is subject to audit. And by scope, I really mean what the single audit will cover. So what the auditors are going to look at during the audit. And then if we compare the single audit to the program-specific audit, they're really essentially the same thing, except for 3 differences. So the first difference, and probably the biggest, is going to be the scope. For the program-specific audit, that audit is only going to look at one award. So in this case, the auditors would only be looking at the SVOG award. The second difference is that a program-specific audit does not include a financial statement audit component. And then the third difference is that the type of opinion that the auditors will express is different between the single audit and the program-specific audit. Again, you don't really need to know the nitty-gritty on the differences, just more of an FYI for you that there are differences between the types of opinions an auditor will express, depending on the type of audit you elect. So really, program-specific audit is just a smaller version, I guess, of a single audit. It's likely to be a quicker audit for you and less burdensome. All right, and if you're a non-federal entity and you find yourself trying to figure out whether you are eligible for the program-specific audit, hopefully this simple flowchart should help. You know, it really just comes down to one thing. which is, did I receive more than one federal award? And that could be, directly from a federal awarding agency like the SBA, or, maybe indirectly. So maybe it's a federal award that you received through your state. If you only receive the SVOG award, then you are eligible for a program-specific audit. If you receive the SVOG award plus at least one additional federal award, excluding PPP and the ERTC, and I'll go into this in a little bit more detail on the next slide, but then you are required to undergo a single audit. So again, if you received SVOG and PPP only, you can elect program-specific audit. Say you received SVOG, PPP, and ERTC, you can still elect the program-specific audit. And on this slide, I've identified some other common federal awards that you may have also received. This is not an all-inclusive list. However, it is common awards that we received specific questions on during the last webinar. So if you look at this slide here, all of the awards with the green check mark, so EIDL, FEMA assistance, NEH grants, etc., are considered a federal award in which the single audit requirement applies to. And then as indicated by the red X, the single audit requirement does not apply to the ERTC, the RRF program, or PPP. So what does that mean? If you received SVOG award plus any of these awards with the red X, you are eligible for a program-specific audit. I do want to point out that CARES funding received from your state or local government may or may not be subject to the single audit requirement. Unfortunately, it's not a black or white or yes or no answer. If the pass-through entity, let's say the state that provided you the federal funds, identifies you as either a beneficiary or contractor, then the single audit requirement is not relevant. So in that case, you would be eligible if you received that plus SVOG for a program-specific audit. But if you were identified as a subrecipient, then the single audit requirement would be relevant. So, because this is a it depends situation, if you have specific questions, if you're not sure if it meets the single audit requirement or not, I would probably recommend you reach out directly to the entity in which you received the funds from to verify. All right. So the next two slides here, I've tried to apply this concept to various specific examples, which were derived from the questions that we received during the first webinar, actually, and that we didn't have time to answer live. So I do want to mention that when answering these questions, I'm assuming that you are required to have an audit, that you're a non-federal entity, and that you expended $750,000 or more of federal awards during the fiscal year. So for the first scenario, if my not-for-profit entity received EIDL and an SVOG award, am I allowed to submit a program-specific audit instead of a single audit? If so, do we need to audit both programs, EIDL and SVOG? Excellent question. EIDL is considered a federal award. So if you're not eligible for the program-specific audit and you are required to audit. However, it will still only be one audit, right, under the single audit. It will look at both programs, EIDL and SVOG, during that audit. So both programs are subject to audit, but it will be conducted within one audit. So there will be one audit report at the end of that. And keep in mind, I'm assuming, again, that you are a not-for-profit or other non-federal entity. If you are a for-profit entity, EIDL is not subject to the single audit requirements. So therefore, you would be eligible for a program-specific audit if that is the option that you elected to choose. The second question or scenario is, will the audit of the entity's annual financial statement suffice for the single audit requirement? The answer is no. Again, if you are a non-federal entity, it's no. You must have the single audit. However, as I mentioned, the financial statement audit is a component of the single audit So it will suffice for that portion, but the auditors would still need to conduct the compliance procedures in accordance with the uniform guidance. Okay, and just one last scenario here. My organization received SVOG funding from SBA and also funding from the Education Stabilization Fund from my state. The state informed us that we are considered a subrecipient. Would the funding received from the state be considered a second source of federal funds that would preclude a program-specific audit? And yes, in this scenario, the federal funds received via the state, that's considered a second source of federal funding. So therefore, you're not eligible for a program-specific audit and you must undergo a single audit. Again, I know this can be kind of a tricky subject, so whether or not funds received via the state or local government, it's not going to be an automatic yes or no. It's really going to, I guess, be dependent upon how you're classified when you receive that award. Are you a contractor, are you a beneficiary, or are you a subrecipient? Okay. So moving on to the next topic that I just wanted to spend a few minutes quickly recapping due to some of the questions we received is the inclusions and exclusions of the $750,000 expenditure threshold. So this slide just, I think, gives a nice summary of what is included or excluded from the calculation of the $750,000 threshold, which, as you remember, that is the threshold to determine whether or not you are required to have an audit at all, whether that be a single audit or a program-specific audit. So on the left side, we have what is included, and on the right side, we have what is excluded. And there's really two main buckets of items, right? So the first item that's going to be included in the calculation is just going to be the funds expended, I guess, or spent. So if you received funds or incurred costs related to funds, but you did not spend those funds, then it is not included in your calculation. Also, we received some comments on accrued expenses. Accrued expenses are not included in the threshold calculation. Again, you have to expend or spend the federal funds. And then the second, I guess, component that's included is just going to be the funds that, again, you spent, but you spent to reimburse yourself for pre-award costs. Those are going to be included as well. And I'll actually, in a few slides, touch on the concept of pre-award costs in a bit more detail. Actually, on the next slide, I'll touch on it. So, and this is related to pre-award cost as it relates to the SVOG program. Generally with grants, you can't spend the money before you receive the award. So some grants may not have pre-award cost. However, this is not the case with the SVOG award, as the SVOG statute allows the SVOG program to have pre-award cost for a period longer than what 2 CFR 200 says. So because the SVOG program allows for costs to be charged to it dating all the way back to March 2020, chances are going to be pretty high that you have expenditures related to a time period prior to the initial award issuance. So in the context of when we're talking about the SVOG program, a pre-award cost is going to refer to any cost that is charged to the SVOG program in the fiscal year or years prior to the fiscal year the SVOG award was received. And because of this concept of the pre-award cost, and again, whether or not, I guess, pre-award cost should be included in the calculation of the $750,000 threshold, it's only going to apply in the fiscal year in which you received your initial SVOG award. So if you received your initial SVOG award in fiscal year 2021, and you're trying to determine in fiscal year 2022 if fiscal year 2022 is subject to an audit or not, there's never a case where you would have pre-award costs included in your fiscal year 2022 threshold calculation, because again, it only applies to the fiscal year in which you received your initial award. I know that's a mouthful, so I want to just kind of apply this to an example, and hopefully that'll make it make a little more sense. So in this scenario on the slide here, the grantee has a June 30th fiscal year end. The grantee received its initial SVOG award on August 1st, 2021, which is going to be fiscal year 2022 for the grantee. And the grantee charged costs to the SVOG program dating back to March of 2020. So with this example, are there any pre-award costs? Yes, there are. And what are they? So the pre-award costs are going to be the sum of all of the costs charged against the SVOG award during the period March 2020 through July 31st, 2021, which again is the entire period prior to when that award was received on August 1st. And then, and looking at which fiscal years the 2020 and 2021 costs are related to, they are both related to fiscal year 2022, and that is because that is when the award was received. That means that the 2020-2021 costs are going to be used when calculating the $750,000 expenditure threshold for fiscal year 2022. And if you end up exceeding the threshold in fiscal year 2022, then those 2020 and 2021 costs, in addition to any expenditures you may have in 2022, would be included within the scope of the audit over fiscal year 2022. So in this case, in this situation, because you received the initial award in your fiscal year 2022, there would, fiscal year 2020 and 2021 would not be subject to an audit because you didn't have an award in those 2 years, regardless of the pre-award costs that you had. Hopefully that makes sense. I know it can be kind of a complex subject that you have to kind of think through and kind of apply your specific dates and scenario to this, but hopefully you can kind of ask yourself these questions if you're trying to determine pre-award cost and how that relates to which year is subject to audit. All right, and here we have, this is just a repeat of the timing slide from the first webinar. And I just wanted to quickly remind everyone of the timing for completing your audit. The deadlines are governed by the uniform guidance. So the federal agencies, they don't set these deadlines. And they're the same regardless of whether you're undergoing a single audit or a program specific audit. The single audit must be completed no later than 9 months after your fiscal year end. So the fiscal year end of your organization. For example, if you have a 12/31 fiscal year end and you're subject, excuse me, to the single, excuse me. It's allergy season, I apologize. So let's say you have a 12/31 fiscal year end and you are subject to the single audit requirements, meaning you've spent more than $750,000 or more during fiscal year 2021, then the audit would need to be completed no later than September 30th of 2022. I do want to highlight, excuse me, that in March 2021, the Office of Management and Budget issued a memo that did provide a 6-month extension to the single audit submission deadline for all recipients and subrecipients with fiscal years ending through June 30, 2021. So as you can see on this slide here, if your fiscal year end was June 30th, 2021, you actually do have until September 30th, 2022 to complete your single audit. Keep in mind that if your audit is completed sooner than within the 9 months, then you must complete the single audit submission process within 30 days of receiving the audit report. And again, in the first webinar, we went in quite a bit of detail on the single audit submission process. So if you have any questions on that, I would highly encourage you to take a look at the recorded video that's been posted to SBA's website. And I do realize that some of these deadlines are coming up soon. We do encourage you to please complete and submit your audit as soon as possible, and just keep your grant management specialist informed of the status. Sorry, I'm incorporating small water breaks here. I think, did we lose the slide deck? There we go. Okay. All right, so there were also several questions that we received related to trying to understand which fiscal years are going to be subject to audit based on, a grantee's unique circumstances. So again, I wanted to walk through a few of these different scenarios with you. Hopefully, if you kind of see the concepts applied to specific scenarios, then you can kind of take that back and apply it to your own specific situation if we're not able to touch on it during this webinar. So the first question or scenario that we received is, we use accrual-based accounting. The initial SVOG award was received in our fiscal year 2021, and the supplemental award was received in our fiscal year 2022. And all of our expenses are from fiscal year 2020 and fiscal year 2021. Which fiscal years are we required to have an audit performed? So for starters, an audit for fiscal year 2020 is not required because you did not receive the SVOG award until fiscal year 2021. Now, the 2020 costs would be included in the fiscal year 2021 audit if you met that threshold as the pre-award cost. And fiscal year 2021 and fiscal year 2022 would be subject to audit if and only if you expended the $750,000 or more of SVOG funds in each year, fiscal year 2021 and fiscal year 2022. Those would be separate audits. You cannot have one audit to cover both years. You would have to have one separate audit for each year. The second scenario, if I received $1 million in SVOG award in 2021 and a $600,000 supplemental award in 2022, and then I expended $750,000 in 2021 and I expended $850,000 in 2022, are we still required to do a single audit for 2021 and 2022, even if a portion of what we expended in 2022 was received in 2021? So the answer is yes. Again, remember that the determination of when an audit is required is based on when the funds were spent or expended, not when received. So in this case, an audit is required for fiscal year 2021 because you expended $750,000. It's also required for 2022 because you expended $850,000. In both of those scenarios, you met or exceeded that threshold. And if we go to the next slide, we have a few more scenarios to walk through quickly. The original SVOG award and the supplemental award were all received in fiscal year 2021. The use of all funds occurred in fiscal year 2020 and fiscal year 2021. Is one single audit required? Again, I'm going to assume in this case that $750,000 or more was spent in fiscal year 2021. So yes, either a single audit or a program-specific audit is required, but only for fiscal year 2021. Because the award, again, was not received until fiscal year 2021. The 2020 expenses are considered pre-award costs and would be included in the fiscal year 2021 audit. And the last scenario, we received more than $750,000 in SVOG funding and used it over 2 years. Can we just have one audit of the full award that covers both periods? No. An audit can only cover one fiscal year. So again, there would need to be a separate audit required for each fiscal year in which you expended $750,000 or more. Again, I know I sound like a broken record maybe on some of these examples, but we did receive a lot of questions. There appeared to be some confusion out there regarding which fiscal years are subject to audit, when do I need an audit? So I wanted to provide a variety of examples for you guys to kind of go back and use as a reference if you have any questions. All right. As we discussed in the first webinar, the single audit or program-specific audit must be completed by an independent third-party auditor. An auditor can be considered either an audit firm or a sole proprietor, so an individual. But either way, regardless, the auditor must be external and independent to your organization and must be a certified public accountant or CPA. So for example, your company's accounting director could not perform the audit as they're not external or independent to your organization. One question that was received last time, it related to, I believe it was a performing arts organization that's a university. And the question was around whether or not that organization could use the financial affairs department of the university to conduct the audit. And no, that would not be allowed because the financial affairs department, again, is not going to be considered external or independent. They're part of the university. And so, while we cannot give examples or recommendations for specific auditors or audit firms out there, we have included additional resources on this slide that you can utilize in your search for an auditor. Your state's always a great place to start, whether it's the State Board of Accountancy, maybe the state CPA societies, even perhaps the state auditors. So that's one great resource. Another excellent resource is going to be the AICPA. And this slide contains a link to the AICPA's peer review directory and their Governmental Audit Quality Center member listing, which identifies firms that have expressed a commitment to audit quality. So I would highly encourage, if you're still looking for an auditor, to take a look at these resources here. I mean, you can also search the website singleaudit.org. Even Google could give you some possibilities. But again, just remember, it can be a firm, it can be an individual. However, they must be independent, external, and a CPA. When you are selecting your auditor, it's really important that you ensure that the auditor has the right experience, training, and resources to conduct the audit. As you probably learned in the first webinar, these audits can be pretty complex, pretty unique. And if you hire an auditor that has no experience, doesn't understand the complexities of single audits and program-specific audits, it's probably not going to be a very enjoyable experience for you. So just keep in mind when you're looking at auditors to make sure that they have some sort of experience and knowledge in this area. All right, so now we're going to switch gears a little bit for the remainder of the presentation and spend some time talking about the SVOG section of the 2022 Compliance Supplement. So the Compliance Supplement, it's an appendix to the Uniform Guidance that is issued annually by the Office of Management and Budget. It's almost a 2,000-page document that provides instruction and guidance for how the federal agency wants the auditors to evaluate the grantee's compliance with its federal programs. In total, there's 12 different general compliance areas within the Compliance Supplement. And then the Compliance Supplement essentially allows the federal agencies to specify which of those 12 requirements are going to be subject to audit for each program. So as Matt mentioned at the beginning, the 2022 Compliance Supplement was issued on May 11th. And if you haven't taken a look at it, I strongly encourage you to take a look at it. I believe we're going to post a link to it in the chat. So that's there for a reference for you. But this document, the compliance document, or the Compliance Supplement, excuse me, as well as Subpart F of the Uniform Guidance, those are really going to be the two most important pieces of guidance that the auditors will use when conducting the audit. Within the Compliance Supplement, the auditors are going to primarily focus on Part 3, which contains general audit objectives and suggested audit procedures. that would apply to all programs. And then the specific SVOG section in Part 4, the auditors will also use. All right, so this slide just provides a visual image of the 12 different compliance areas within the compliance supplement. You will notice there's no box for letters D or K. That is not an error, that is correct. And that's because those sections are reserved, so there are no related compliance areas in the 2022 compliance supplements for D and K. And then on the slide, I've highlighted in blue the 3 compliance requirements that are applicable for the SVOG program. So these are the compliance requirements that the auditors will test when they come in to do the single auditor program specific audit. But I do want you to keep in mind that if you're undergoing a single audit, that means that the auditors are going to be looking at awards other than the SVOG program, right? And because it's up to each federal awarding agency to select the compliance requirements for that award, it is very possible that other federal awarding agencies selected additional compliance areas to test. So if you're undergoing a single audit, yes, the auditors are going to be required to look at these 3 areas, but if you have other awards, they may have to look at, say, eligibility and matching level of effort and earmarking, because that's required by the other federal awards subject to audit. So keep that in mind. If you're only doing a program-specific audit related to SVOG, then it'll just be these 3 areas that the auditors look at. If we go to the next slide. All right. I realize that this is pretty small. I tried to fit a lot of information on here, so you guys can use this as a reference in the future. But no matter what compliance areas are being looked at, there's really some overarching key pillars of documentation that you should be maintaining if you received federal grant funding. I tend to think about this documentation in 3 different, buckets or swim lanes, so to speak. First, you have documentation related to internal controls. So this is going to be your policies and procedures around what controls you have in place to ensure proper segregation of duties, that there's an effective review system in place, etc. The second bucket is going to be financial policies and procedures. So for this, think policies and procedures related to the financial reporting aspect of the grant revenue and expenditures. So for example, how do you track grant-related expenditures within your financial system? Or what processes do you have in place to ensure that you don't overspend grant funds? And then the last bucket, the grant file, that's just going to be all of the documentation related to the federal award. So the signed grant agreement, the approved budget, documentation supporting the necessity of grant expenses, etc. Again, so on this slide, I've identified the 3 compliance requirements that are subject to audit for the SVOG program, which are the activities allowed or unallowed, the allowable costs and cost principles, and the period of performance. So again, during the audit, the auditors are going to be performing procedures to test compliance specifically with these 3 areas. And as I mentioned on a previous slide, the auditors are going to use Part 3 and the SVOG section of Part 4 as probably their main resource when developing their audit approach for auditing this SVOG program. I also think I want to mention that the 2021 compliance supplement did not include a Part 4 section for the SVOG program. So in the event that your audit is subject to the 2021 compliance supplement, if you're having a fiscal year 2021 audit, the auditors are likely going to use the SVOG section within Part 4 of the 2022 compliance supplement to complete their testing. There's nothing out there that precludes them from doing that. And again, this information on this slide and then going forward is really just to provide you all with some insight into what to expect from the auditors during the audit, developing the audit approach, the procedures, all of that is the responsibility of the auditor, not you as the grantee. But I did want to give you some insight into what to expect, so it's not a surprise for you. Okay, so we're going to spend some time talking in a bit of detail on each of these 3 compliance requirements, with the first being activities allowed or unallowed. I do want to highlight that these 3 compliance areas are pretty closely related, especially the activities allowed and unallowed and the allowable cost and cost principal requirements. So because of that, during the audit, there's going to be a significant amount of overlap and the audit procedures related to these areas. And oftentimes they're really just tested together. But for the purposes of kind of breaking down the compliance supplement and explaining its various sections in a webinar, I'm going to discuss these 3 separately, which in reality is probably a bit more exaggerated than what it looks like and feels like during an audit, but just for presentation purposes, I wanted to talk about each 3 separately. So I'm just quickly going to go over the unallowed activities for the SVOG program, and then we can move on to the activities allowed. So SVOG funds cannot be used for anything you see listed here on this slide. Purchasing real estate, payment of interest or principal on loans originating after February 15th, 2020. You cannot invest the funds or use them for contributions or expenditures political in nature. You cannot use them for prepayment of mortgage payments or other debt instruments. And then finally, you cannot use the SVOG funds to purchase items of prurient sexual nature. And this slide identifies the 8 allowable cost categories for the SVOG program. And over the next few slides, I'm going to go into a bit more detail on each of these categories. So if we go to the next slide, we have the first category being payroll, as you can see on the slide. I do want to point out that on this slide deck, these categories are grouped according to the categories listed in the compliance supplement, which is not necessarily going to be consistent with the fields on your SVOG budget and expense form. So just as we're going through this, please keep that in mind. But for payroll costs, so payroll costs include the sum of payments of any compensation with respect to employees that is a salary, wage, commission, or similar compensation, payment of cash tip or equivalent, allowance for dismissal or separation, payment of state or local tax assessed on the compensation of employees, and also includes the cost of fringe benefits. That can include a variety of things, including vacation, parental, family, medical, sick leave, insurance premiums, group life, healthcare, group life, disability, vision insurance, stuff like that. SVOG funds can also be made to make employees whole for temporary reductions in pay an employer had to impose due to the COVID-19 pandemic. So for example, if you had to reduce employees' pay as a result of economic hardship experienced, let's say by, 50%, you could use the SVOG funds to restore the lost 50% of the employee's wages. Obviously, this can only occur during the eligible period of performance. I think if we can go to the next slide, we'll talk a little bit about independent contractors. So this is another one of the 8 categories. Independent contractor payments are allowable under the SVOG program. However, there is a cap of $100,000 max annual compensation for each individual employed by its independent contractor. Independent contractors can take many business forms, so it could be an individual, it could be a corporation, it could be a partnership, it doesn't really matter, but the independent contractors are responsible for the means and methods for completing a task based on specifications in a contract. So you can see by this application example on the slide, let's say you have 2 independent contractors working for you, and in fiscal year 2021, contractor A performs $80,000 of work and contractor B performs $70,000 of work. Because the cap is $100,000 per each contractor, you can use the SVOG award or the SVOG funds to pay for both contractor A the entire $80,000 and pay contractor B the entire $70,000, because again, it's on the individual contractor level. And also the SVOG post-award and their regular FAQ documents provide a lot of additional detail on independent contractors. I know there's a lot of different nuances out there in this area. So if you have specific questions related to your unique situation, I realize I probably oversimplified this example, but I encourage you to take a look at those documents first. And then if you still have questions, definitely please reach out to your grant management specialist and they will be able to assist. Okay, so these next 2 allowable cost categories are pretty straightforward. Covered worker protection expenditures is really just expenditures related to the purchase, maintenance, or renovation of business activities of an entity to comply with requirements established or guidance issued with respect to COVID-19. And then covered utility payment is the payment of electricity, gas, water, phone, internet access during the eligible period of performance. Next slide, please. And I think rent obligations, this category is pretty straightforward as well. You know, kind of stripping the 8 cost categories from this discussion for a moment, you know, SVOG funds can be used to cover your monthly rent payments during the entire eligible period to incur costs. And that's regardless of whether the lease began before or after February 15th, 2020. So monthly rent payments during the period of performance are an allowable cost under the SVOG program. Now, where the February 15th date comes into play, that's really used to determine which budget category on your SVOG expense report the costs are associated with. So if they're rent payments on a leasing agreement signed before February 15th, 2020, then those are going to be charged to the SVOG award under the budget category, operating lease, and rent payments on lease agreements signed after are going to be classified under the rent payments category. I do have an example on here. In the interest of time, I'm not going to read through it, but again, this presentation will be posted. So if you guys want to take a look at this in the future, it's here as a reference. One last thing before we move on is that I do want to point out if you're signing a new lease and you are required to pay a refundable security deposit or really any other refundable fees, those refundable deposits are not an allowable cost. You know, if you think about it, that's going to result in at some point in the future your organization receiving federal grant money outside of the period of performance, which is not allowed. Again, another rather straightforward allowable cost category, mortgage payments, both principal and interest are an allowable cost. So if you received the SVOG initial and supplemental award, you could use the SVOG funds to pay your mortgage cost between March 2020 and June 2022. But please note that SVOG funds cannot be used to prepay any future mortgage bills that would occur after June 2022. Another SVOG allowable cost category includes scheduled payments of interest or principal on any indebtedness or debt instrument incurred in the ordinary course of business. Congress did use pretty broad language when describing this category, and the broadness, if you will, applies to the debt incurred in the ordinary course of business prior to February 15th, 2020. If you did incur debt after February 15th, 2020, the payments are only going to be an allowable cost if that debt is related to one of the allowable cost categories for the SVOG program. Also, we received some questions on this. Payments made on SBA-backed and SBA direct loans are considered an allowable expense under the SVOG program, so long as those loans began prior to the February 15th, 2020 date. And lastly, we kind of have this catch-all category here, which is other ordinary and necessary business expenses. So I've included some examples of common items that would be allowable as an ordinary or necessary business expense. However, this is definitely not an all-inclusive list. If you're trying to determine whether or not any of your costs are allowable under this category, you want to ask yourself, is it a common and accepted expense in my business or industry? And is the expense helpful and appropriate to keep my business in operation? When auditors are determining, whether or not a cost is allowable, especially under this category, they're going to be applying the IRS's definition of an ordinary necessary expense, which is listed here in the red font. Again, some common examples of expenses that could be considered ordinary and necessary include maintenance expense, state and local taxes and fees. This also does include real estate taxes and personal property taxes levied on buildings and equipment, but that has to be directly related to eligible SVOG program operations. If we go to the next slide, we have some additional examples. Operating leases, we already talked about that one under the rent category. Payments required for insurance on any insurance policy during the period of performance. Again, this has to be part of the ordinary and necessary business operations. So as a general rule of thumb, prepayments would generally not be considered an allowable cost. For example, let's say you renew your insurance policy annually, and historically you've always made monthly payments. You cannot all of a sudden elect to prepay the entire annual amount when it's up for renewal just because you have the SVOG funds. That would not be ordinary necessary business. But if historically you've always made annual payments on the date of the renewal, and that renewal happens during the period of performance, that may be considered an allowable cost. In that situation, I would reach out to the grant management specialist. But that's just an example of, really applying kind of what's happened historically and what's ordinary necessary in your business, applying that concept to some of these different types of other costs. Grant or claimed owner reimbursements to maintain operations. So with this item, owners of eligible entities may be fully reimbursed for personal funds they contributed to an entity to keep it in operation between March 1st, 2020 and either December 31st, December 31st, 2021, if you only received the initial award, or if you received the supplemental award, it would go through June 30th, 2022. However, you must keep sufficient documentation of the transfer and expenditure of those funds. If you do not have any documentation, then those costs will, instead of being treated as other, will be treated as owner compensation, which, as we'll discuss with the next item, is going to be subject to a cap. So again, claimed owner reimbursements to maintain operations, that is an allowable cost. If you have documentation to support the transfer and expenditure of funds, then it can be considered an other expense. If you do not, it's still allowable. It would just be subject to the cap under the owner compensation bucket. And owner compensation, in the context of the SVOG program, owner compensation includes payments to principal or owners. This includes salary, actual draws, distribution, dividends during the eligible period of performance. You must keep in mind, and this is regarding the cap, the goal of the SVOG program is to make you whole relative to 2019 compensation. So the use of SVOG funds for owner compensation is restricted to compensation levels of the 2019 calendar year. If your business began operations in 2020, then the compensation level is set by the first 2 months of 2020. So that would be January and February of 2020. And again, I believe it's question 47 of the SVOG post-award FAQ document provides a really good example of the application of this concept. It has some example calculations of how to calculate the limit on the owner's compensation cap. This FAQ, it's on the SBA's website, and then there's also, we've included a direct link to it on the information and support slide at the end of this presentation as well. Both depreciation and ticket refunds are an allowable cost. Also, a reasonable and proportionate amount of the audit expenses are allowable. And I know this was a hot topic during the last webinar. Unfortunately, I can't give you any sort of clearly defined definition of proportionate, but think about it in the context of what percentage of audit expense is associated with the SVOG program. And whatever that percentage is, that associated cost would likely be considered proportionate. So let's say you only receive funds from the SVOG program and are undergoing a program-specific audit. 100% of that audit expense is going to be related to the audit requirements for the SVOG program, right? So it seemed reasonable that 100% of the expense is an allowable SVOG cost. Now compare that to a different scenario, and let's say you received federal funding from 3 different federal sources and are undergoing a single audit. That single audit is going to include looking at the SVOG award, but it's also going to look at 2 other federal awards that you received. So because only a portion of the audit is looking at the SVOG program, it would not be reasonable or proportionate to charge 100% of that audit expense to the SVOG program, right? Because the audit expense is also related to audit requirements for other programs. I can't tell you exactly what percentage of that audit could be applied to the SVOG program. You just want to make sure the important thing is to document how you came up with the percentage, why you think it's reasonable, and if the auditors are looking at that during the audit, if you give them that documentation, you explain your rationale to them, and it is reasonable, you should be good to go. So hopefully that provides a bit more context for you guys on that requirement. And then lastly, film rent expenditures is an activity that is allowed if it's within the normal and ordinary course of your business. All right, next slide, please. So when the auditors conduct testing over this requirement, they really have 2 main objectives. First is going to be to gain an understanding of the internal controls that you have in place to ensure that only allowable costs have been charged to the federal awards. And again, this is primarily going to consist of discussion with various personnel within your organization, and then review of your internal policies and procedures documents. And then second, the auditors are going to be looking at probably a sample of expenditures and then request underlying documentation to support that the expenditure was for an allowable cost. And if we go to the next slide, I've identified some examples of common requested supporting documents. For payroll costs, examples of documents you may provide include employment contracts or similar types of documents that include the terms and conditions of the employment, the salary information, etc. Timesheets reflecting actual time worked and charged to the award. Examples for equipment and supplies could include paid invoices or receipts that display the vendor's name, date of purchase, a description of the items that were purchased. For rent payments, you would want to provide a copy of the signed lease that includes all of the important information. For state and local tax bills, you could provide a copy of the tax bills and receipts demonstrating that you made the payment, what date the payment was made. Examples of documents you may provide for maintenance expense include work orders or quotes, any signed agreements for services, copies of paid invoices, again, these are just some examples to give you an idea of the type of documents that you should be maintaining, and then to provide the auditor if they do request it. You just want to keep in mind when you're thinking about documentation and what you should maintain or provide the auditor, their goal is to determine that it was an allowable expense, that the amount charged was accurate. So you'll want to make sure that the documentation you give them demonstrates that the amount paid, what it was for, when it was paid, and how much was paid. And I think we're going to take a quick break for some questions, although I'm looking at the time. It may make sense for us to keep going, and then at the end we can come back to questions if we have time. Sarah, is that okay?
Sure thing.
Okay. So if we go to the next slide. Okay, so we're going to jump into the second requirement that the auditors will test, which is ensuring that the allowable costs are in accordance with the required cost principles. The uniform guidance establishes cost principles for determining costs applicable to federal awards, and these principles are designed to ensure that the federal government bear its fair share of costs, except where restricted or prohibited by law. So a good place to start if you find yourself questioning whether some of maybe these less straightforward other or ordinary necessary costs that you have are in accordance with the cost principles for the uniform guidance. You want to ask yourself, really kind of start with these three questions. One, it should be reasonable and necessary cost to keep your business in operation. It should be based on sound business practices that are normal and common to your operations or industry. And then lastly, it needs to fit into one of the 8 approved cost categories that we just went over. Next slide. So in addition to the cost being allowable per the federal award, there are 5 key principles or considerations that you'll want to ensure the cost doesn't violate. First, as I've mentioned several times, I probably sound like a broken record by now, but the cost needs to be reasonable and necessary for the performance of the federal award. So for the SVOG award specifically, the purpose was to provide emergency relief to keep your operations going. So for example, travel is an allowable cost, but what's not allowable is unnecessary or excessive or unreasonable travel. Second key consideration is that the cost must align with any cost caps. The SVOG program did establish some cost items as allowable, but up to a certain spending cap. So you'll want to ensure that any costs charged to the SVOG program do not exceed those caps. The cost should also be consistent with your typical operations. So for example, if it's been your company's practice to only provide employer furnished laptops to employees, SVOG funds should not be used to just go out and purchase new tablets or smartphones for the staff just because you have the grant money. That would be an extreme example, but an example of a violation of cost principles. Another example would be your organization just simply raising salaries because the salary expense can be charged to the SVOG program. Again, that would be a violation of the cost principles. The fourth key consideration is that costs should be consistently categorized as direct or indirect. I don't think that there's likely going to be too many indirect costs that would be applied to the SVOG program, especially if you only receive the SVOG award. So this likely isn't a huge concern, and I'm not really going to spend too much time on indirect costs. And then last, but certainly not least, you cannot double dip. So you can't use funds from both PPP and the SVOG program to cover the exact same payroll costs. Funds expended and charged to the SVOG program cannot be charged to any other federal funding source. We can go to the next slide, please. And because the SVOG program is structured as a grant program, All recipients must implement their awards and spend funds consistent with the uniform guidance, as we've talked about. Section 200.420 of the uniform guidance identifies a number of costs that generally are strictly prohibited from being charged to any federal award. However, the SVOG program does allow the use of SVOG award funds for a specific use beyond the scope outlined in the uniform guidance for a few items, which are highlighted on this slide. So some entertainment costs, the purchase of alcohol, and some advertising and public relation costs may, again, it's not black and white, but they may be charged to the SVOG program if the costs are considered ordinary and necessary to your business operations. And another cost principle to be aware of is the direct versus indirect cost. Again, I think most charges charged to the SVOG program are going to be direct cost, so I'm not going to go into too much detail on the indirect cost principle. And then one other item that I do want to point out is that the SVOG funds must be maintained in an interest-bearing account, and any interest over $500 must be remitted to the Department of Health and Human Services payment management system. All right, so some common audit procedures for cost principles. Again, this testing of this requirement is likely going to be done at the same time or intertwined with the testing over the activities allowed or unallowed requirement. First starts with the internal control testing, again through discussions with various personnel, review of your internal policies, procedures documents. The auditors, their goal is going to be to get an in-depth understanding of your process, understand how you as your organization ensure that costs charged to the SVOG program are in alignment with cost principles. And then again, they're going to select a sample of expenditures, probably going to be the one sample of expenditures, and they're going to test all three of these components of it. So, the documentation that you provide, that you provided when we talked through the cost or the procedures for the first requirement, say it's a rent payment. If you give them the signed lease and evidence of the payments made, they're going to be able to look at that documentation, and that same documentation they're going to use to test all three of these requirements. So, this is exaggerated examples. All of this testing is really going to kind of be done at once together. But again, they're going to look at the documentation you provide, to make sure that those costs that were charged or those expenses, that they didn't violate any of the key considerations that we just discussed. So, they'll make sure that they were accorded consistent treatment, that the costs conform to applicable cost limitations, that they were necessary and ordinary business expenses. And I think that's pretty much it for that slide. If we go to the next slide.
So looking at time, I think we might want to also skip this section just to make sure we can cover all of the content. And again, if we have time at the end, we will go through the questions. Does that work for you, Jen?
That does, yes. Thank you, Tara. All right, and so the third compliance requirement that the auditors are going to test is the period of performance. So ensuring that all allowable costs were incurred within the period of performance. For initial SVOG awards, the period to incur eligible cost is March 1st, 2020 through December 31st, 2021. And if you received a supplemental SVOG award, then the period to incur eligible costs related to both the initial and the supplemental SVOG awards is March 1st, 2020 through June 30th, 2022. For many grants, the period to incur cost is going to be the same as the period to expend funds. However, that is not necessarily going to be the case for the SVOG program. For SVOG, the period to incur cost is the performance period, which is defined here on the slide that I just went over, and that's going to be consistent for all SVOG initial and supplemental awards. But the the period to expend funds, that is going to be based on the budget period, and that is identified on your NOA or Notice of Award. And because the period to incur costs can be different than the period to expend funds, I think understanding the distinction between the two is really important when it comes to the SVOG program. So if we go to the next slide, on this slide, really the purpose of this is just to explain, kind of in plain English, I guess, the concept of incurred versus expended. I think expended is probably the easiest of the two concepts to grasp. Expended just means when you spend the grant funds. So when the payment is made or when the cash is spent or reimbursed for those pre-award costs. And again, SVOG funds can only be spent during the budget period, which may be different than the SVOG period of performance. And it's listed, I believe it's box 5 of your Notice of Award document. And it's going to be dependent on when you received your initial SVOG award. So I believe it's the budget period is 12 months from the initial award issuance if you received an initial award, or 18 months from the initial award issuance if you received a supplemental award. But again, you'll want to check your NOA if you have questions on the exact dates. Then if we compare expended to the concept of incurred, a cost is generally considered incurred on the date in which the cost was recorded. Again, this is a generalization, but generally this includes, when a contract was executed or signed. But there's not necessarily a black and white definition here. It really comes down to what's normal or typical based on your organization's own accounting norms and business practices. You just want to be in alignment with that. But the costs, they have to be incurred within the period of performance. So cost incurred within the period of performance, cost expended within your budget period, and those two could be different. And if we go to the next slide, I've provided some general examples here. And this table shows various SVOG allowable cost categories and when that cost would be considered incurred and when it would be considered expended for the purposes of the SVOG program. So for example, payroll costs are likely incurred when the service is performed, maybe when the hours are worked, and considered expended when the employee is paid, or when you have reimbursed yourself for previously paid allowable costs. Rent payments, those are generally considered incurred on the day the rental agreement or lease or another binding written document is signed, and then cash would be expended when the rent is paid. So hopefully you can that gives you a little bit of background on the expended versus incurred and how to think about it in the context of the SVOG program. And then if we go to the next slide, I've applied these concepts to scenarios, again, based on questions we received during the first webinar. So the first question, if we received the initial SVOG award and then months later received the supplemental SVOG award, does that change the time frame for which we can expend the funds? Yes, it does. So if you received a supplemental SVOG award, it changes the time frame for which you can, it actually changes the time frame for which you can both incur and expend funds. The period of performance to incur cost related to both the initial and supplemental award will be between March 1st, 2020, and then through the June 30th, 2022. And then the budget period will also change to 18 months from your initial award issuance. Can we accrue an audit expense as we have not yet hired an audit firm and the period of performance ends on June 30th, 2022? So in this case, you would need to incur the expense, so have a signed contract on or before June 30th, 2022. And then, you would just need to keep in mind that that expense would need to be expended, or I guess paid for, prior to the end of whenever your budget period is. Can SVOG funds be used for deposits for events that occur after June 30th, 2022? Grantees should primarily use SVOG funds for artist deposits and guarantees for performances which take place during the period of performance. But there could be some exceptions to this, and you may be able to prepay artist deposits and guarantees for performances scheduled after the period of performance ends. Again, if the contract, if the payment scheduling, if that was all implemented and done in accordance with a manner that's consistent, necessary, and ordinary business practice during the period of performance. If we go to the next slide, we have a few more examples. Right, so we received $745,000 in mid-2021, which was expended, and an additional supplemental of $370,000, which may require more time to expend. Can the time to expend be extended beyond the supplemental program period, which ends June 30, 2022? So unfortunately, there are no extensions on either the period of performance or on the budget period. Therefore, all expenses must be incurred by June 30th. So there's, I think, a couple more weeks left, and expended by the end of your budget period, whatever that period states on your NOA. If you have services that occur after the SVOG award spend period ends on June 30, 2022, are the services eligible to be paid for by the grant? Again, clarifying that you can only incur cost through June 30, 2022, assuming you receive the supplemental SVOG award, and you can spend funds during your budget period, which may or may not end on June 30, 2022. So the answer to this scenario or question would be everybody's favorite, which is it depends. If the services were incurred prior to June 30, then likely yes, but those grant funds would then need to be expended within your budget period. Next slide, please. Okay. When the auditors conduct testing over this requirement, again, similar to what we've already talked about, their main objectives are going to be to determine whether the federal award was only charged for allowable cost incurred during the period of performance. In addition, the auditors will determine whether financial obligations were liquidated within the required time, if that's applicable, which is, I believe, no later than 120 calendar days after the end of the period of performance. Internal control procedures for this requirement, again, the auditors are going to get an understanding of that through the discussions that they have with you at the beginning of the audit to understand your policies and procedures that you have in place. Again, they will, request underlying documentation to support that the cost was incurred during the period of performance, and that funds were expended during your budget period. Let's see if I'm. They will also, it may or may not be applicable. It just kind of depends on which fiscal year is subject to audit. But if your fiscal year 2022 is subject to audit, because that is the year in which the period of performance ends, the auditors are likely going to select a sample of expenditures for which the cost has been incurred but not yet paid, just to verify, again, that those expenditures, if they happened, did happen within the allowable budget period, and if the expenditures did not happen, to verify that the liquidation occurred within the time period allowed. Okay, next slide, please. Q&A.
We did have our next Q&A section. We only have about 5 minutes left. We have been trying to enter the questions from the previous two Q&A breaks into the chat here, so please do reference the questions and the answers that have been posted. There's some good content there. Jen, would you like to take a stab at this before we move into concluding remarks?
Yes, absolutely. All right, so question 1 here. Does executing a contract constitute incurring the associated cost of that contract? Generally, yes. And whether that cost is eligible and allowable, that's going to depend on whether the payment schedule agreed upon is reasonable with respect to your ordinary and necessary business practices. So executing a contract within the period of performance to incur eligible costs just by itself doesn't automatically make it allowable. Again, you just need to make sure that it's reasonable with respect to your ordinary and necessary business practices, and it's related to obviously an eligible or allowable cost. How long will SVOG awardees have to use their grant funds? As I've mentioned, you can spend your grant funds during your budget period, which could be different than your period of performance to incur costs. And your NOA will tell you what your specific budget period is. And finally, can SBA extend my period of performance? Unfortunately, no. The period of performance that's outlined in the statute and cannot be changed by the SBA. That's same for the budget period as well. SBA cannot change either of those.
Okay, great. Well, thank you so much, Jennifer. That was an incredible amount of content, and I'm sure the grantees are super appreciative. I'm super appreciative that you covered all of that. I'm going to quickly run through the information and support reminders and references that we have. So again, this session has been part of a 3-part webinar series related to SVOG audit requirements. So the first in the series, the recording has been posted to our website. We will work on getting this recording updated to our website as well, so that should be ready by next week. And then, of course, we have the upcoming and final webinar in July, and that will overview the audit options for for-profit entities. And then I wanted to briefly highlight some other helpful resources, which is also on our website. So the uniform guidance referenced in 2 CFR 200, applicable laws, the recently published compliance supplement, of course, our post-application guidance and FAQs, and that will be available on our website. So I know we're kind of running up against the end of our time that we've allotted here. So I'm going to turn it back to Matt Stevens for concluding remarks. Thank you all so much.
Okay, great. Thank you, Tara, and thank you, Jen, for a great presentation today. That is a lot of content, a lot of important resources and guidance for our folks that will be required to perform an audit via the SVOG program. So as Tara mentioned, we've got these resources that will be posted on the website. Stay tuned. We will be producing some additional written guidance prior to our July webinar. Remember that 3rd July webinar, as Tara just covered, is for for-profit entities specifically. And I'm so glad that you guys were able to be with us today. Stay tuned for more information as the summer progresses. Thanks again. Bye-bye.